May profits be upon you. Welcome to another weekly Forex forecast. I miss you guys. I miss my subscribers. I miss my viewers. And I'm just happy to have some time to actually put out a video. I hope you appreciate it. And let me know by liking the video and liking the video, subscribing to my channels, and uh, it'll encourage me to do more. Anyway, now that that's out of the way, let's get right into it, shall we? All right. First, we're going to look at the US dollar. All right. The US dollar index. All right. Now, you can see here I have a bearish bias. All right. You can read this later, but what I'm looking at is the fact that price has touched off a bearish fair value gap. All right. And the fact is price was making its way down. We're in a downtrend, made a lower low, lower high, and we made a lower low, breaking this bit of structure here. All right. And this is very important to me because if the break of structure at the point of where price broke structure passes through a fair value gap or overlaps a fair value gap, it usually makes for quite a strong area of resistance, if you will. All right. Also, couple that with directly across from it is a bullish fair value gap. All right. This becomes inverted. All right. Once price disrespects it. All right. Price tends to go through this fair value gap here. Let me get rid of that fair value gap. And when price goes through it, it tends to come back up and continue bearishly. All right. So when I only look at inverted, personally, I only look at inverted fair value gaps as a confluence, as an added confluence, not something I base a trade on. But what I will base a trade on is the fact that price is in a fair value gap after breaking structure, where price broke convincingly with a convincing close through it. And this convinces me of its intent to stay bearish. All right. I'll pull back into the fair value gap. I'm looking for price to continue down lower. The first target will be here at 104.080. And the second target, which is more important, is this swing low here. All right. The deal is once price takes out a low like a swing low, it usually reverses. All right. It usually reverses for the short term and will pull back more than likely to this area. And I will look for a continuation of the bearish trend from there. Okay. So you have our targets. We have our targets and everything. We have the intent of price. You see how price reacted to the this bearish fair value gap. So I'm looking for it to continue. If we go down to the 4-hour, you can see that price formed a bearish engulfer here at the daily bearish fair value gap. So I'm looking for price to come back up into that. If we squeeze in here, you can see that price had made a bullish fair value gap, which was disrespected. Price traded through it. And what did I just say about the daily situation on the daily bullish fair value gap that was traded through? It will come back to that area. And we have an overlapping bearish fair value gap here. So with that in mind, I'm looking for price to continue bullish from here. All right. This is an area to watch. And because it's on the US dollar index, that tells us that if the US dollar is weak, then we can go for longs. We can go for buys and pound US dollar. All right. Or AUDUSD or NZD, the New Zealand dollar against the dollar, the Aussie dollar against the dollar, the euro against the dollar, and the British pound against the dollar. The Japanese yen is a different story. We'll get to it. The Swiss against the dollar. we should be thinking bullishly in those areas because we're looking at a weaker US dollar. Let's go to the indices. Actually, I got this in. I'm going down in the order that I have everything in. Actually, I really should go to the US dollar, the euro, because it's the inverse of the US dollar index. It's the inverse. You can see what I have here. All right, I'm going to post this up on my other accounts, uh, and you can see them in the description of this video. All right, what do we have here? My bias is bullish. All right, it's the exact opposite of the U.S. dollar index. We have a bullish fair value gap. Price has traded through with a very nice push. You can see that there was some news involved in that bullish push, right? But we formed a bullish fair value gap, and price came down, stung into it, got down to the consummate encroachment in this thing, the 50% mark of the fair value gap, and you see the response to it. I'm looking for price to come up to finish its trick. It seems like the intent of price is pretty clear to get to this draw on liquidity here at 1.09160. We're trying to get to that price. That's what it seems, and looks like we should accomplish that next week. Look for price to maybe sting one more time, or maybe even a couple of times into this fair value gap before pushing higher. All right. Uh, is there some insight that I had on this one? No. I'm looking for whether there was I found something on the lower time frames. You'll see what I'm talking about later on. Let's go to the pound. All right. Now, understand something. I'm looking at the futures version of these the Euro USD, the Pound USD, Aussie dollar USD, New Zealand dollar USD, and the Swiss USD, and the US dollar, Canadian dollar, and the uh, what else? US dollar Swiss. Yeah, the US dollar Swiss franc, and the US dollar Japanese yen. I'm looking at the futures version of it, but you have to understand that uh, when it when the currencies are traded on the spot, they're all traded against the US dollar. So you're already looking at, you see, this is the a euro contract, right? This is, you're already looking at euro USD because it's already trading against the US dollar. Do you understand? So I'm hoping that everybody understands that. Okay, so we're looking for a bullish euro USD. All right, let's look at the pound USD. Pound USD, a very similar situation. All right, you can read what I have here later. All right. I don't know why it doesn't say uh, that I am bullish. Bias is, I can't type. All right. I don't know why that was missing. Okay. That was way too much. I'm sorry. Okay. Now, all right. So you can see how close we came here. That is really like within maybe 2 pips, not even pips, points. All right. Look at that. Look how close that is. Oh man, but we're coming close to that goal, and that is the swing high here. So in light of that, next week we should be able to hit that high. But I want you to also notice that we didn't take out Thursday's candle. We didn't take out the low of Thursday, and we did not mitigate the fair value gap. All right, there's a bunch of news things happening in the world that caused the U.S. dollar to become weakened. All right, just think of the Fed chair. Think of of CPI. Think of the the indications that we may be able to get an interest rate, cut in the interest rate, possibly by November. So the markets are betting, all right, are betting that we're going to get those interest rate cuts, which would weaken the dollar, but uh, in encourage an environment of risk on. All right, and so the riskier assets will see uh, a surge. All right, a bounce. So with that in mind, uh, price has the bullish fair value gap under it. We also have a bearish fair value gap that price disrespected by trading through it. And what did I just explain? This is the inverse of that. We should see uh, price trade through a bearish fair value gap and then come back and visit it and then continue higher. All right. That's just on the strength of its own, just on the strength of the fact that it's a inverted fair value gap. But when it's overlapping a bullish fair value gap where price can currently come and test, then it strengthens the the uh, the support that this will provide. You understand? And we also see that price traded through this structure here, and the top of that swing high is overlapping the bullish fair value gap. So if price should come back down into this fair value gap, uh, I believe the probability is pretty high that price will continue higher and do its thing. So that is my bias. What is this? What is this here? So that is my bias on this market, and I'm looking forward to see if price will break that high first, then come back here, or open open lower, come and sting the fair value gap, and then go higher, which I would prefer because then I could take the ride up. If it comes up here first, once we take out a high, remember this. Remember this. We don't buy at the highs. We sell at the highs because there's price has already swept the liquidity here. It has to go from external liquidity, which is a high or a low, to internal liquidity, which is a fair value gap. All right. And then back to external liquidity. It's all about the liquidity. And it's going to go from external to internal to external to internal. You understand? Very good. Okay. Lesson over. Let's move over. Let's move on to the Aussie dollar. On the Aussie dollar, we had the very same situation. Uh, I want to see, did I give some insight on this one? Did I get deeper on this one? No, not this one. Okay. What happens is it's the very same thing. Okay. Price out of this consolidation here. Oops. Out of this consolidation here, right? All of this. Price took out the high. All right. Took out the swing high of that structure. All right. Traded through it, convincing close above, pulled back, just like I just described that price does. It goes from external to internal, right? And we are at that internal, and it definitely did sting. It came down, tapped it in, and we should be on the rise to the draw on liquidity, which is the next swing high. A swing high is the the describes as the high between two lows, two lower highs. All right, this is lower, this is lower, this is the high one in the middle. All right, that is a swing high. All right, uh, so that is the draw on liquidity. I believe price will head on up and try and make that. All right, let's move on to the next one, which would be New Zealand dollar USD. Okay, we have the very same situation. All right, we took out not one but two very important swing highs. All right, price traded through it with convincing close above it, giving you its momentous intent to go higher. Momentous, as momentumous. It's momentum filled anyway. All right. So, but what price has not done, it gave an inside candle on Friday. All right, didn't take out the high or low of Thursday. I'm looking for price to come down first. All right, before going up higher. I'm looking for price to come down first, gather up orders, bullish orders, buyers. Sorry, we're gonna pick up buyers and then go higher. All right, we've already taken out this liquidity at the top of these highs. All right, we got to see we're probably going to see the expectation is that we will see price come back to the internal liquidity pool and then go up and take out the next swing high. Okay. Next is US dollar CAD. Now, from on the future side, it's just CAD, right? It's the CAD futures. So it's actually, instead of it being CAD USD, it's switched to instead of it being, sorry, I got it wrong. Instead of it being USD CAD, it'll be CAD USD. This is what we're looking at here. So you'll have to invert this chart to understand how you would play USD CAD. You understand? This, if we invert this chart, is now USD CAD. You understand? All right. So you instead of uh, looking for longs, you look for highs, and vice versa. Okay. Now let me get my chart back because I tend to forget that it's there. All right. So this one, we are in a bearish fair value gap. The problem is with this fair value gap is it's been tested, and price is trying to trade through it at the moment. All right. So I don't, I'm waiting right now. It did not take out this high here. I mean, this low. Sorry, it did not take out this low. Came very close, but this is a strong low because it broke this high. It broke structure. All right. When you have a low, the only job of it is to make a new high. You understand? The only job of a high is to make a new low. This one failed to do it here. All right, didn't break that low. So I am uh, uh, I'm watching this. All right, I'm watching this very closely. All right, because this is it, this could turn out to be a pretty bearish, a pretty bullish situation. But because I am looking at a weaker US dollar, I'm tentatively bearish on this one. There is a lot of uh, low resistance to taking these lows out. All right, all right. All of these lows here, all right, are going to be low resistance, and price could swim through that and take out these relative equal lows. So that's what I'm looking at. But we don't have a signature by price that says uh, price is going low yet. What I would like to see is price give me a strong close below Thursday, below Friday's lows over here, below this Wednesday candle. I would like to see a candle that closes below here. All right. This would give me a change in the state of delivery. I'll look for price to then come back up and then give us the sweep of all of this. All right. So that is what I'm looking out for here. So I don't have it written here. All right. I'm just noting what I don't see. All right. The swing high was broken, and internal move came after the high was kept. Look, this is almost filled. All right. After an internal move, I'm looking for an external move down to these lows. So I am cautiously, tentatively rather, bearish on the CAD. Okay, um, yeah, I'm looking at this situation, and